All right, Bulls and Bears back with another dose of economic reality, BX4 News. Let's go ahead and get right into it, folks. We've got some shocking news here that probably a lot of people did not expect to happen. We've got wholesale prices actually dropping. That's right, in the face of all the tariffs, all the fear, and all the news telling us how high prices were going to go, how empty the shelves were going to be. Just the opposite happened. We see wholesale prices drop. We're going to get into that and a lot more. But let's go ahead and start with this first. We have warnings of supply shocks. They're still coming out and telling us that there's going to be supply shocks. Fed Chief Jerome Powell warns U.S. could face supply shocks. He's cautioning the U.S. could face an increase in supply shocks. This comes a week after the central bank announced it would hold rates steady. Of course, we all know that they had a pause. They did not move the rates, basically remained neutral. Quote, we may be entering a period of more frequent and potentially persistent supply shocks, a difficult challenge for the economy and for central banks. And I said right here in this channel, I didn't expect there to be any empty shelves or any widespread shortages. I said you might want to stock up on a few things, some food items to get you through maybe a few weeks, couple months, even better. But as far as like going out preparing for like a years long famine, I said right here I wouldn't be pushing that button at all, right? Some people have said or accused me of being doom and gloom, fear mongering. If you go back and look at what we've talked about here, we've been pretty accurate on this channel, right? We've never said that there was going to be any bubbles busting unless there was a black swan event. We still haven't seen a black swan event. So everything's pretty accurate as far as we've been talking about here in this channel. But now we have this new warning issued by some others about coming rising prices, coming inflation, shortages. Now remember, shipments from China did drop off very significantly. They dropped as much as 60% directly following that pre-tariff spike there. But now tariffs have been backed off down to about 30% for China during this 90-day, what they're calling a temporary pause in the tariffs, and maybe they'll be completely eliminated. We'll have to see how it plays out. Maybe it'll be even trade at some point, right? Who knows how long, but I wouldn't buy into the fear mongering, the doom and gloom. Again, people have said that I've warned about these things. I'm saying just the opposite. I'm thinking that nothing seriously will happen to the supply chains unless we get another 2020. Again, a health crisis, black swan event, all the different things that could cause, this entire economy to shut down. That's what you have to be cautious about. Other than that, life goes on. Debt continues to climb. Consumers taking on more credit card debt. At some point, you have to scratch your head and start asking, why? How is this possible? How do things keep getting more expensive? How do people keep financing everything, but yet not imploding? You would have expected by now to see a big implosion in the U.S. consumer, a bankruptcy tsunami. Well, if you look back over the years, we've told you why this hasn't happened yet. All the programs designed to keep people afloat, to keep people from sinking, from drowning under all this debt. Well, a lot of those programs are being yanked away right now. A lot of those help programs, like the student loan pause where they didn't have to make their payments, that just ended. Did you see the last video where we showed you the chart of the delinquencies? They basically went straight up, parabolic. And this could be a disaster that's going to be unfolding in the next few weeks. But then again, they could re-implement it so the implosion doesn't happen. Folks, everything from the economy to the loan defaults to foreclosures, everything has been manipulated and assisted, right? They've come in. It's not a free market. Bottom line, we don't have a free market. Back to the housing bubble example, right? How many foreclosures did we see 2007, 2008, 2009? 8, 9, and 10 is really when they started. 2008 through 2010, that was the big period of foreclosures. It was about 2.5 million per year. Go back to 2020, folks, it would have been over 7 million if it weren't for the foreclosure moratorium. In other words, the housing bust in 2020 should have and could have been twice as bad as the housing bust in 2008, but they didn't let it happen, right? That's the thing. They didn't let it happen. Whatever they don't want to happen, they can come in, and I'm talking about the money controllers, basically, the ones in control of the money printer, if you will. Unless there's a big black swan event where even they, talking about the money controllers, cannot stop natural market forces. But with all this intervention, folks, they can keep these bubbles going for a long, long time. And it's just a matter of will consumers stay solvent long enough? Well, in this case, they have, but will it continue? Well, take a look at what we're going to talk about next, and I think it'll give you kind of a clue here. Credit card delinquencies rise again. Delinquencies continue to rise, but we're never seeing the capitulation where everything just completely implodes, like a housing bust, like any sort of Black Monday market crash, where we're not seeing that. They have mechanisms now to keep the market from crashing. We told you after the big sell-off, I didn't think it was going to keep going. I said there probably going to be big buyers of the dip, and there's going to be this big support program to come in. I think we all know what we're talking about there as far as how the markets are propped up, and they come in with liquidity that they can inject at the click of a mouse, trillions of dollars, and keep these markets propped up, because the money is no longer something you have to have tangible. You don't have to have it in your hand. It's just digits on a screen. So of course they can click a mouse just like any computer, and just like any computer can do, and they can keep these markets propped up, folks. I mean, we should all know this by now. All right, but moreover, on the credit card delinquencies, the proportion of credit card holders who are 90 days late or more delinquent increased to 7.04%. So 7% of the population is 90 days or more delinquent on their credit card payment. And that was from the first quarter. That was 6.86% at the same time last year. So not a huge increase, but an increase nonetheless. And it tells you that people are just continuing to survive and make it through while just carrying debt, and a lot of people not even being able to pay off their minimum payment. These are delinquencies, meaning they're not even making their minimum payments. It was actually down from 7.18% from the fourth quarter. So things got slightly better in the first quarter, which a lot of people also would not have expected. And then we have articles and news reports like this. Bloomberg, look at this. Is it too late to save the U.S. economy? All the evidence suggests that recovering from the tariff debacle will neither be easy or swift. So wait, recover from the debacle? What debacle? There's no empty shelves. Prices actually haven't spiked like many people predicted. And in fact, look what just came out here. Look at this recent news here. Wholesale prices dropped 0.5% despite the tariffs, folks. So these are the prices that businesses pay before the consumers come in and buy the goods and items. Wholesale prices dropped unexpectedly for April for the first time in more than a year. Right? So we're seeing just the opposite. The tariffs are supposed to make prices spike, empty shelves, and now we're seeing inflation slowing down to 2.3%. We're seeing wholesale prices drop. All right, so what's going on, folks? Is it because a lot of the businesses were front running the tariffs? Is that why? Because there's a lot of inventory still in the back room, so to speak. But in the next month, we're going to start seeing shortages and supply shocks, like the central bank's warning, like many quote experts are warning. Right, again, I'm saying I'm not always right, but look at it from a common sense point of view. Do you see it really getting that bad? I don't see it getting that bad, but stock up and continue to prepare, prepare for the worst. All right, more good news out of Apartment List. We have an update. Rents actually are down slightly from year over year. And let's bring up a chart here. And again, something that people said would collapse. They said rents were going to collapse because so many people are leaving the country because all the new administration rules and laws that they're enforcing now. But it hasn't collapsed. In fact, we're down year over year, several years in a row, but rents haven't collapsed. And when you look back prior to 2020, median rent was actually under $1,100 in 2020. This is for the typical, is it 2-bedroom or 1-bedroom? Apartment List. Let's see here. Sorry, I think they listed up here somewhere. Oh, they don't say. They just said the median rent. So I guess that's across all apartments, right? And this is apartments, so it looks like not single-family homes. But you get the picture. Less than $1,100, and we're still near $1,400, folks, median rent. So things aren't getting much easier, and we were right about that. We said that prices would remain elevated, that there would be no crash in prices. There will be not much deflation, more inflation than deflation. We've been 100% right on that, folks. So the way that we've invested in this here is, one, precious metals, other assets that we look at to try to hedge against this. And I've talked about them here many times. So without investing, I'm not sure if I would even afford to live where I'm at right now. I might have had to sell my home years ago without investing here. So that's why I kind of try to tie in the economic news with investing, right? One or the other is fine, just alone by themselves, but both together, I think it's a very, the best way to do it, right? The most important way to try to keep ahead of this here. All right, people, let's move over to real estate for a minute here. Look at the mortgage balance, folks, in trillions of dollars at the peak of the housing bubble, late 2008. We were at about $9.25 trillion, folks. Now we're approaching $13 trillion. But yet we're not seeing a tsunami of foreclosures. We're not seeing a housing bubble go bust. Something is keeping the bubble from popping. Well, what is it? It's a few things. It's lack of inventory, right? Inventory is rising, but it's still very low from historical norms. When the housing bubble went bust back then, there was a huge surge of new supply coming out of the markets, newly built homes, new construction. Now we're not seeing that. Also, back then, we had the banks that were in fear. They were in fear that they were not going to be remaining in business, right? We saw a couple mortgage lenders go under. We had banks fail, like Washington Mutual got bought up by Bank of America. We had some other mortgage companies. I'm trying to think of the name of them. I've talked about them many times here. But back then it was, sorry, let me use the the GPT here to get the list here. AmeriQuest, Washington Mutual, Lehman Brothers, that was a big one. Countrywide Financial, some of these not just mortgage lenders, but you get the point. New Century Financial, Bear Stearns, Fannie Mae, Freddie Mac. They were not directly failing is what they said here, but these were government-sponsored enterprises that were taken into conservatorship in 2008. Yeah, that's right. I almost forgot about that. Fannie Mae and Freddie Mac were almost not surviving that debacle there because they had to get not surviving. They did not. They almost didn't survive because the helping hand came in, and we know what that is. That's the money machine, folks, in the background. The printer that has unlimited digits that can be created out of thin air to keep these markets propped up. So, folks, this is going to remain until something big comes in and breaks this. And what's it going to be? Is it going to be a global financial reset? I have some people out there telling me that that's in the works right now, that it's being done in the background, that nobody can see it right now. Secret operation, if you will. Folks, I don't believe it until I see it. But until then, prepare for the worst. Strive for the best here. We're going to wrap this up for now. Please let me know what you think about this down below in comments. The delinquency numbers, the total debt in trillions of U.S. mortgage debt, and why the bubble hasn't bust. Do you agree with me? Do you disagree? Let me know down in the comments. We'll talk about it. Keep stacking, everybody. Bye for now. Peace.